Hi guys, it's Thomas here from COTbase.com. Welcome to our weekly COT review. Today we're going to be looking at the 23rd Commitments of Traders Report of 2019. And as we always do, we're going to start off with the changes in commercials positions. Here we go. You can see feeder cattle on top of our list with a 41% change in commercials positions. Pretty large change if you look at the 1 year that we're looking at. It is the largest change, suggesting that the decline that we witnessed on Thursday and Friday could easily continue on next week. Jumping to the 5 years chart, we get a chance to analyze the COT Extreme. And maybe if we go to the 3 years chart, you can see more easily, because not necessarily in commercials or large speculators, possibly large speculators, but here we have small speculators at a 309 report COT Extreme, and you can see that when small speculators were at an extreme or in a extreme period for quite some time, that actually coincided with a bottom in the market, pushing the market higher. So this signal could be coming from small speculators this week. Moving on to our next market, the Minneapolis wheat, where we have a 35% change in commercial positions, 26 in large speculators. Again, a bearish COT change signal after a rally in the market Thursday, Friday, suggesting this should bounce back downwards. Jumping to the 5 years chart, we can see that we are more or less in between, possibly a bit closer to bullish extreme levels. You can see the last major bullish extreme, relative bearish extremes that we had in the market. Nothing too unusual here. I'd suggest moving on to looking at gold, which is an exciting market these days. We had a huge 32% change in commercials and 36% change in large speculators positions. Very, very large changes, suggesting there could be a bit of a decline happening in the gold market. Now, jumping to the 5 years chart, you can see that the bullish extreme that we had back in October of last year was a successful signal, pushing the market much, much higher. Now, we've definitely not reached a significant or close to all-time bearish COT extreme levels. One that I'm showing to you from July of 2016 was a great example for signaling a top, and of course we're definitely not at those levels. So the change signal suggests there could be a bit of a decline. The last major extreme was actually bullish, and we've not reached those all-time or close to all-time extreme bearish levels. Nevertheless, we have a relative bearish extreme, so you can see a 58 report in commercials and large speculators as well. Okay, moving on to large speculators COT Extreme, we have Oats on top of our list with a 308 report extreme, both in commercials and large speculators. Well, it's pretty obvious it is a bearish COT Extreme signal. You can see that the market has already dropped. We've been talking about Oats, and of course that signal, it seems to be taking its effect on the market. We are seeing lower prices now, and of course this could easily continue on for the next few weeks, month. We definitely are far away from bullish extreme levels. A currency for the next market is the Brazilian real. We have a 225 report extreme in large speculators. The same exact extreme can be witnessed in commercials. This is of course a bullish COT extreme, suggesting further higher prices coming in the Brazilian real against the US dollar. And last but not least, let's open the heating oil market, where we have a 183 report extreme in large speculators, 179 in commercials. This is of course a bullish COT extreme signal, suggesting a market turn upwards. Of course, correlating markets should be analyzed as well. So that's all for this COT review. Of course, you can do a more in-depth and detailed COT analysis if you visit COTbase.com. I hope you enjoyed this review. Thank you very much for your attention, and I hope to see you next week. Have a great weekend. Take care. Goodbye.